Hi friends, to all the CA, CMA and CS, those who are pursuing. So myself Shivaram Krishna Bollu. So I have started a new channel called as BSRK Professionals. Recently I started a channel. So within this channel, so what I am doing is what I am providing the kind of services to the students. So I am uploading all the kind of Indies. So nothing but who are pursuing their CA final or CMA, and for them, if they want to know about the entire knowledge about the financial reporting, and of course, these particular videos are meant only for those students who have already taken the coaching and those who wants to enhance their knowledge for the second and third time. Definitely, these kind of videos will be definitely helpful for you. So why I am saying all this is, so those who wants to learn the financial reporting since from the beginning, these videos are not at all helpful for you. So why? Because those who already taken the coaching and who wants to so revise their conceptual knowledge at a glance in a faster extent, so definitely these videos which can be helpful for you. Is it okay, friends? So ultimate objective of creating these videos are to enhance the complete knowledge on the financial reporting and to make a quick kind of revision. For that reason, I started the channel called as BSRK Professionals, and you can if you want to ask any kind of doubts with reference to any one of the standards, you can ask me. And today, within the financial reporting, what will happen? So, what kind of Indies will be there, and what difference will it makes as compared to the accounting standards? So, might be if you have come from the IPCC, might be you are aware of the accounting standard ka knowledge. When it comes to CA final, you will be having the concept of Indies. So, generally, what are the differences between the accounting standards and Indies? There might be some carve-ins and carve-outs are there. Carve-ins and carve-outs. What does it means? Those information which is not there, then those information will be included in the Indies. So Indies is a kind of additional knowledge as compared to the accounting standards. An additional information will be given in the Indies. But of course, all the entities are required to prepare Indies, and there is some criteria are there. So if the specific conditions are met with, then only those companies only they are required to prepare what's Indies. So remaining companies, if they will follow the accounting standards only. Only specific companies are required to prepare the Indies. So the main objective of preparing this particular videos are simple, sir, to enhance the complete knowledge about the financial reporting, a quick revision, a glance on the entire standards, and you want to get the grip on the subject, a conceptual understanding, a conceptual analysis, then I can make in all these kind of videos. But one thing is very clear, I will not solve any kind of problems in my discussion. Simply, I am providing a kind of knowledge. I am sharing my knowledge with you such that you can able to understand you can able to memorize all the standards what you read within a short period of time. Why? Because you can't go to the standard and you can't read each and every point. Hence, if you are attending for all these classes, definitely you yourself can able to understand the subject in a better manner. Hence, you can able to interpret the whatever the questions also very fastly. Okay, friends, this is the objective of starting of the channel BSRK Professionals. And let's come to the subject. So we are going to start with some kind of course I can give you from tomorrow onwards a schedule will be given. So India's schedules will be issued. So what kind of standards? Of course we will be covering each and every standard, there is no doubt about that. But from the examination point of view, what are the core standards are important for you? Even I can discuss even that also. So why? Because there are some accounting standards, and those accounting standards even which will be there in the Indias also. but some additional Ind AS will be included in the CA final. Is it okay, friends? Fine. So ultimately, let's come to the subject matter, financial reporting. Our financial reporting, the main objective means what, sir? Whatever the standards we are discussing as of now, all these are the standards which are helpful in preparing the financial statements of an entity. Sir, how these financial statements are helpful? And of course, among all those Ind AS, which Ind AS are related to numerical numbers, and some Ind AS are there which are related to purely a reporting aspect. Means what, sir? By learning of all these Ind AS, something will be helpful in solving the problems, and some standards will be there. Those are which are helpful in order to helpful for the reporting purposes. Reporting purposes means what? Simply we can able to write something. Okay, this we can able to say some disclosures will be there, some notes to accounts are there. Best example from your point of view, Ind AS 10 is there. Let's take an example. So events occurring after the balance sheet date and events occurring before the balance sheet date concepts are there. So when we are discussing about events occurring after the balance sheet date, events occurring before the balance sheet date, purely what will happen, sir? This is the standard which will be saying about will it be an adjusting event or a non-adjusting event. If it is a non-adjusting event, what will happen? A disclosure will be required. A disclosure will be required in the notes to accounts. If it is an adjusting event, definitely because of such kind of adjustment, we need to restate the assets and liabilities. Definitely restatement will be done. And earlier there is a debtor balance is there. Might be our financial year is 22-23. Let's take an example. Our entity sold goods during this 22-23 period. But one of the customer, our entity thought that he may not make the payment, hence our entity has created a provision for bad and doubtful debts. Subsequently, our particular debtor has become bankrupt or insolvent. So the moment when the debtor has become bankrupt or insolvent means what, sir? When the event is happened, that is important. For example, if the same event is happened on or before 31st March, then we can say whether it is an adjusting event or a non-adjusting event. That's important. But once again, standard said that if I want to say something is an adjusting event, and those events which occurred, so between the balance sheet date and before approving the financial statements by the board of directors, they will be called as what, sir? Adjusting events. So there are some events are there which are occurred after the balance sheet date but before approval of financial statements by the board of directors. In such case, they will be called as what, sir? Non-adjusting events. But generally, as we know that only adjusting events only will be reflected in the books of accounts. Adjusting events only will be reflected in the books of accounts, and non-adjusting events will not be reflected in the books of accounts. Is it okay, sir? And those who are attending for the classes, then you yourself can able to understand adjusting, non-adjusting. And it means what? Some of the reporting standards are there, some of them are numerical number related standards are there. And another important issue. So if we can discuss about each and every standard, there is a purpose is there. If we can ask about the core standards in our financial reporting, if Ind AS 115 is there, Ind AS 115 will be specifically focusing on the revenue from contracts with the customers. Each particular standard will be saying, earlier in accounting standards also, revenue standard is there. In the revenue standards, they are saying very clearly, when should I recognize the revenue in the books of accounts? You can think, the moment when the entity transferred the goods / services to the customer, and from IPCC point of view, accounting standard point of view, the recognition will be done at the time of transfer of ownership of the goods. Whenever the ownership is transferred, entity can go and recognize the income. But when it comes to Ind AS, it's a different scenario. Why? Because if you want to recognize revenue, it's not that much easy. There is a 5 steps mechanism and 5 steps procedure you have to follow. So when you follow the 5 steps procedure and 5 steps approach, then only entities can go and recognize the revenue in the books of accounts. The standard said like this. There are some 5 conditions will be there. Identifying the contracts with the customers. Identify the contracts with the customers. And identifying the performance obligations in the contract. Within that contract, how many performance obligations are there? And another one, determine the transaction price. Determine the transaction price. And step number 4, allocation of transaction price to the performance obligations of the entity. And step number 5, determination of the revenue as and when the performance obligations are satisfied. Determination of the revenue as and when the performance obligations are satisfied. There is a 5 steps mechanism to recognize the revenue in the books of accounts. In particularly Ind AS 115. Ind AS 115 will be saying like that. When it comes to the revenue standards in IPCC, it will be saying that whenever the ownership rights are transferred, whenever the risk and rewards are transferred, so usually entities can go and recognize the revenue in the books of accounts, but which is not true when it comes to Ind AS 115. Ind AS 115 said a 5 steps mechanism. In those 5 steps mechanism, they said very clearly, yes, if you satisfy the following conditions, then the entities can go and recognize the revenue. So when we are going further, definitely we can able to understand each and every step. Of course, in each and every step there might be some crucial important points are there. So then only you can able to understand the entire whatever the Ind AS 115 standard. This is only introduction to the classes. And if you can ask me, sir, what kind of other important standards are there in our CA final financial reporting? One of the standard is core standard is Ind AS 115, revenue from contracts with the customers. Is it okay, sir? And of course, when it comes to Ind AS 109, so Ind AS 109 will be majorly focusing upon what, sir? Financial instruments ka standard. Under Ind AS 109, what they are saying is, for each and every item, means what from your understanding point of view, there is a financial asset is there, financial liability is there, financial and equity is there. So they have given a clear-cut definition about a financial asset, a financial liability, and an equity also. Not only this, just by giving a definition of this is financial asset, this is financial liability, this is an equity, that itself is not sufficient. So clearly a clarity has been given saying that okay, if it is a financial asset, if it is a financial liability, if it is an equity, that's okay. But what is the accounting methodology for the financial asset? But what is the methodology for financial liability? But what was the accounting methodology for the equity anedi, which is also dealt or covered by Ind AS 109. Those are called as what, sir? Measurement. If you want to measure this particular financial asset, what method I have to follow? Like this Ind AS 109 said that there are some 3 methods are there. FETPL method, FET-OCI method, as well as FETPL method. FETPL, FET-OCI, sorry sir, ACM method is there. Amortized cost method is there. Like this, they said that some methods are there. So generally, each particular financial asset ki, can I follow ACM method, financial FETPL, FET-OCI? The question can come. But standard said very clearly which method has to be followed. That depends upon the business model and contractual cash flow test. So depending upon the business model and contractual cash flow test, then they will decide which method you have to adopt, either FETPL or FET-OCI or the amortized cost method. Which method has to be followed depending upon the business model and contractual cash flow test. When we go there, definitely we will go and discuss the same. And similarly, there are asset related standards are there. Asset related standards means what? When it comes to Ind AS 16, property, plant and equipment is there. When it comes to property, plant and equipment, what you have to understand is each particular standard will be covering. For every standard, there are some scope in item and scoped out items are there. And each particular Ind AS 16 will be covering only these items. These items will not be dealt with by Ind AS 16. Like this, some scoped in items, scoped out items will be there. Try to understand the definition of a PPE. You have to understand the definition of a PPE. Subsequently followed by, if I want to recognize the PPE in the books of accounts, can I recognize the PPE in the books of accounts? What was the recognition criteria? So let's take an example. If you bought an asset on behalf of a company, so when you bought an asset on behalf of an entity, can I recognize in my books of accounts? A question can come. For standard Ind AS 16 said very clearly there is a recognition criteria. If you want to recognize the PP in the books of accounts, what criteria you have to meet? Recognition means what? From your understanding point of view, writing of a journal entry. So writing of a journal entry is called a recognition criteria. But Ind AS 16 said, if you want to recognize a PP in the books of accounts, there is a recognition criteria. And followed by, and what are the methods in which a PP can be acquired? Means what? PP can be acquired by way of making payment of cash. What was the accounting? What is accounting treatment for that? If PP acquired by way of deferred settlement terms, then what was the accounting treatment? If PP acquired by way of issue of shares, then what was the accounting treatment? If PP acquired by way of a government grant, what was the accounting treatment? Like this, there are so many issues will be there. And followed by, what was the measurement? What was the subsequent measurement? So, means what, sir? Whatever the PP is, you have shown in the books of accounts. When it comes to 31st March, when it comes to the reporting date, on 31st March, how will you report or how will you recognize? So what methodology will you follow for the subsequent measurement, for which there are some methods are there. Cost model is there, as well as the revaluation model is there. Might be you can ask me, sir, when can I follow cost model, when can I follow revaluation model? There are some methods are there. Can I follow cost model, can I follow revaluation model? So which method has to be followed? Everything we will be discussing in deeply. And last but not least, once if everything has been completed, you will be knowing about the de-recognition of the asset. So when can I de-recognize the asset in the books of accounts? Let's take an example. There are some assets are purchased by the entity. One of the asset is sold by the entity. So one asset is sold by the entity and I have to de-recognize. I have to de-recognize the asset. That is called as de-recognition. And followed by the concept of decommissioning cost. What was the accounting treatment for the decommissioning cost? How to dealt with by the Ind AS? Right? This is Ind AS 16 will be discussing about the same. When it comes to Ind AS 36, impairment of assets. Impairment of assets. What this standard ka main purpose? Whenever you are preparing your financial statements, you can go and stand exactly on the reporting date and ask yourself, whatever the assets we reflected in the books of accounts, will it shows a true and fair value? Like this Ind AS 36 was saying. Means what? For example, there are some 10 assets which we purchased for around 5 years back. Exactly after 5 years, we prepared the financial statements. Whatever the balances we shown in the books of account, that is, those will be called as the carrying amounts. Carrying amounts will come after provided depreciation only. But E standard will be saying very clearly, you have to provide impairment loss on such assets. Then might be providing impairment loss on such assets means what does it mean? Each and every asset is subjected to impairment loss. Impairment loss will be provided subject to a condition that only impairment indicators are existed. Only impairment indicators are existed, then only entities can go and provide impairment loss. So there are particular Ind AS 36. Impairment of assets standard said very clearly. Please go and stand exactly on the balance sheet date or reporting date. If on the reporting date, if impairment indicators are existed, then only entities can go and provide they can do impairment testing. Maybe you can ask me, sir, how can I do the impairment testing? For example, there is a substantial decline in the market price of the share. there is substantial decline in the value of the asset. So whenever there is a decline in the value of the asset and the asset value has fallen down, the moment when the asset value has fallen down, then what does it means? There is a decline in the value of the asset. Now ultimately what will happen is the impairment standard said very clearly, we need to compare the carrying amount of the asset with the market value of the asset on the reporting date. And if there is any huge gap you identified, means if the carrying amount of the asset is greater than its recoverable amount, for that difference entities can go and provide the impairment loss. Standard very said very clearly what is the accounting treatment for the impairment loss. Our impairment loss will be charged to, of course that depends upon the models. That depends upon the models only, the impairment loss will be provided in the books of accounts. Is it okay, sir? Either cost model or the revaluation model, or which model can I follow for the impairment of the assets? And there is a separate standard is there. Our standard will be covering the same. And followed by another standard is there with reference to assets only. Ind AS 40. Ind AS 40 का standard said very clearly investment properties. Investment property standard का purpose is very simple, sir. Investment properties. For example, there is an entity which has purchased a land and buildings and which is used by the entity for giving rentals to others. So whenever an entity is using the buildings for giving rentals to others, means what? By way of letting out of the whatever the building, we are generating the source of income. So by way of letting out of the plant and machineries, we are generating the source of income. Or for capital appreciation purposes, means what? If any asset which is used for the purpose of the business entity for earning rental incomes or for capital appreciation purpose covered by this standard. Same discussion. What is the initial measurement, what is the subsequent measurement, and how to show in the books of accounts. Ultimately the standard is at the same. And what was the recognition criteria, and at last what was the de-recognition, how to recognize the asset and how to de-recognize the asset in the books of accounts. Like this, all the asset related standards are there. We will be going and dealing with one by one standard such that you can able to understand what was the accounting treatment of all those Ind AS. Is it okay, sir? So every Ind AS will have some kind of purpose is there, sir. What was the purpose of the standard? We will be discussing about the same. And what was the accounting treatment for that? We will discuss. So that we shall continue our classes from a particular date. Definitely I can announce the date. So when we are going to start our classes. So the main objective and the main essence of all these classes will be to provide a kind of enhanced knowledge and the conceptual understanding on all the standards, such that prior to one day of commencement of the exam, you yourself can able to revise it very fastly, very quickly, such that the preparation can become very easy for you. Is it okay, friends? And whatever the efforts which I am making, friends, definitely if you thought that these efforts are definitely which is helpful for you, and you can like these, you can like all these videos, and you can share it, and you can subscribe it, and you can share with your friends also, subject to a condition that if you felt that the kind of classes what I am providing and the kind of knowledge which you are getting, so which is useful for your value addition, then definitely you can like it, share it, comment it, and you can subscribe the same. Thank you so much, friend, and we shall continue our classes from tomorrow onwards, and I can release a kind of series also. So from which date, which Ind AS will be covered, so what are the topics will be covered, everything I can provide you. So within the whatever the information I can provide to you, friends. And another important point, only the conceptual understanding only, there will be no theoretical problems. Once all the standards are completed, I can lift the ICAI material. Within the ICAI material, I will not read each and everything. The purpose is very simple. On glance, I will go through all the problems. You can capture the books in front of you. Hence, I can tell you what was the purpose of that problem and what are the relevant provisions associated with that problem. I can explain it with you also. Any friend, thank you so much. Bye for now.